Everyone, how are you? Hope you're doing well. I'm really trying to make this video, although my allergies haven't been helping so much. But let's go. Let's get started. As you all know, I hope that you know that we have started now our chapter 3. But before I go on to chapter 3, I would like to remind you the importance of having, actually it's not chapter 3, it's unit 3. As you can see here, unit 3, business and labor, okay? But I left you as homework for you guys to read the market structure, which I hope you have done. The market structure consists in 3 lessons. Lesson 1, you will learn about competition and market structures. Lesson 2, you will talk about market failures and the possibilities of market failures. And they will introduce you to many factors. What can cause a market failure? Not enough competition, not enough information for the people, or the entrepreneurs or business, of course, resources that can't or won't move, which means here that imagine an entrepreneur who will not move, refuses to move the market, where they could earn more money and therefore facing unemployment. Another negative factor that can affect the market is too few public goods. Remember, public good is a product that is collectively produced by everyone and whose use by one individual does not diminish the satisfaction or value available to others. Perfect examples we have: highways, police protection, flood control, national defense, and so on. I'm really hoping that you have read this, okay? Another factor we have are externalities or spillovers. What is this? Okay, let's go. Let's talk about this a little. The 5th reason that the market fails is the failure to compensate for spillover effects. Okay, what are spillover effects? Spillover effects can cause market failures when the cost and benefits of a new activity are not reflected in the market prices that users pay. The example that they give you here is about an airport. Imagine this airport expanded and it attracted more travelers. This is good, okay? What is here my negative externality or negative spillover? As the airport expands and attracts more travelers, the added noise would generate additional and uncompensated discomfort and annoyance to the airport's neighbors. So these people who live around the airport, they will have a negative spillover effect, okay? It's uncompensated harm, cost, or inconvenience suffered by a third party. Remember, these people are third party. They are just suffering these consequences because of the place where they live. This might also generate benefits or advantage to the families of travelers if the travelers were able to spend more time at home or on other activities. Remember that a spillover can also have a positive effect. What is a positive effect here? Imagine you are the kind of person who travels a lot, and the fact that you live near the airport can be a positive spillover. You get to spend more time with your family. You don't have to be stuck in heavy traffic and able to get to the airport. The issue of compensation is important to both spillovers. Clearly, the airport does not compensate the neighbors who are inconvenienced by the noise. So the noise is inconvenient to them, but they are not compensated for that. Likewise, families benefiting more from time spent with their travels, they do not compensate the airport for the new flights. So I have the advantage, the positive spillover, that I live near the airport, I spend less money in traffic and more time with my family. This is good for me. But as a third party, I do not pay anything to the airport. And vice versa when we have the negative spillover, where those people, they suffer from the noise, extra pollution, and they're not compensated for what they're suffering. As long as the price that travelers pay for air travel do not reflect the negative or positive spillovers that airport flight route changes regenerate, we will have a market. Okay, taxing harmful spillovers. How can the government tax? Pollution is definitely a negative spillover, and it's really difficult to correct because unregulated firms often have an incentive to pollute. They give you an example of a historical firms that were located near rivers. Why were they located near rivers? Because it was convenient for transportation. It's very easy. Good. So what did the firms do? They also used the rivers as a giant waste disposal system, which helped their production costs lower than if they had to pay for the waste disposal. What would happen here? This led to lower market prices for the final product for the consumer, okay, more purchases, and then even more pollution. Who was affected by the negative spillovers from the pollution? Certainly, it was the people who lived downstream from the polluting firms, or who paid for the pollution in form of lower water quality. So they lose water quality to pay for the pollution, even though they do not buy the final product. How can this be dealt with? This is the role of the government, where the government really needs to step in. Okay, governments cannot simply make pollution illegal. Okay, but they can use set pollution standards, as they already do for automobile emissions. Another answer might be to tax firms for the pollution that they discharge in the air, and therefore the final product will be more expensive. Okay, each of the solutions requires some degree of government involvement, and sometimes government is reluctant to act. Okay, worried about the factor of unemployment. Nevertheless, we need to realize that negative spillovers are already hurting people, and that correcting the spillovers may lead to a more efficient allocation of resources and less pollution. Why did I show you this? Because if you go to your Blackboard, you will find in Unit 3 an assignment, okay? But the assignment in Unit 3, the first part of it is about Chapter 7. Chapter 7 discuss spillovers. These occur when a market activity impacts someone who is not a party to that transaction. Remember, if I live near the airport and I suffer from the pollution and the noise, this is a negative spillover. Now, if for me it's good because I travel a lot, I don't get stuck in traffic, I spend more time at home, it's a positive spillover, okay? This is your question here. What is an example of a negative externality that you have encountered? Remember, the same thing as a spillover. And you have to talk about negative in your life and how did it affect you? You have 5 points. Also, what is an example of a positive spillover that you have encountered? How did it affect you? You write here. It's also 5 points. And this part here, we will take a look at it right now in Unit 9. Okay? So in Unit 9, what are we doing? We talked about market structures, prices, and we're going to go a bit to talking about business and labor. Okay, how can you get the most out of each unit? Try to read the introduction, which is on your portal, your Blackboard. Okay, it's very interesting. This is the first paragraph in the first chapter. Why are some businesses owned by individuals where others are owned by thousands of shareholders? It's very important to understand this word, shareholders, and we go to share. Share usually is the equal part into which a company's capital is divided, entitling the holder to a proportion of the benefits. How can I explain this? Imagine Petrobras, okay? Petrobras has shares. If I buy 2 or 5 shares of Petrobras, I become a shareholder, okay? Something else would actually help you to understand this unit. Make sure you have read the introductions and objectives of this lesson. You will find this in your Blackboard. Okay, read the lesson overview. It will help you understand what you read in the textbook or in the portal. In our case, it's the online book. Take notes on Chapter 8 and 9 in your textbook. Important notes, important vocabulary. After this completes the Lesson 3 guided reviews. We have reviews, guys, which are very good. And then you will have the answer key in the resource section. I will show you in a bit what is a resource section. Complete the Lesson 3 assignments. Okay, they all have submission guidelines. Okay, this is what you have to do. And there we start Unit 3, Chapter 8. Okay, evaluating economy, how do individuals and groups work independently and cooperatively to achieve goals. You have a video here, gender and wage inequality. I think it will be very interesting for you to watch. Chapter 8, as you can see here, I separated for you some vocabulary which would be a good idea for you to know. We have franchise, we have franchisor, we have double taxation, we have interest, common stock, preferred stock, stockholders, we have stock, we have unlimited liability, we have income statement, we have net income, we have nonprofit organizations, we have cooperative or co-op organizations, credit union, labor union, collective bargaining, chamber of commerce, and so on. Let me see if everything is good here. Okay, so we took a quick look at Chapter 7 from Unit 2, which is market structure. Okay, Chapter 7 has 3 lessons, lesson 1, 2, and 3. Your assignment is basically based on lesson 2 in Chapter 7, but I strongly suggest that you read lesson 1 as well. It will help you. Let's go back to our lesson here. Okay. Lesson 1, we have forms of businesses and organizations. Remember, we have many forms of businesses, okay? And how are businesses formed and how do they grow? We have 3 main forms of business organizations, okay? We have a sole proprietorship, we have the partnership, and the corporation. There's a hybrid business that is also called franchise. It's also popular and combines investment opportunities with ownership. Okay, each one of them offers its owner significant advantages, and remember disadvantages. For us to start this chapter, let's start with talking a little bit about Samantha. Okay, so imagine Samantha sells homemade cupcakes or homemade coxinha on the sidewalk in front of her house or on the street. As a sole proprietor, she's her own boss. She does all the work, she makes all the sales, and she keeps all the profits. Now imagine instead she makes and sells cupcakes with her best friend. So if she sells it with her best friend, they will share profits from the cupcake business, certo? And then they will be operating as a partnership. So this is the basic difference between proprietorship and a partnership. As we go on with this lesson, try to think about the benefits and drawbacks. What benefits does Samantha face as a sole proprietor? What are the pros and cons she encounters if she runs her business with her best friend as a partnership? Let's think about this question while we go on. The most common form of business organization in the United States is the sole proprietorship. Okay, this is the most common one. As you can see here, I have the number of organizations, and it's around 71.5%. Why? What makes proprietorship the easiest form of business to start? Why is it so easy to start? The proprietorship is the easiest form of business to start because it involves almost no requirement, just an occasional business license that we need to get from the government. Most people are ready for business as soon as they set up operations. Okay, I want to sell coxinha. It's fast. Okay, I want to start giving free. I want to start teaching online classes. I can start anytime that I want. Remember, a sole proprietorship can be run on the internet, in your house, in the garage of your house, in an office, or in a professional building. What are the advantages? First one, as you have learned, it's very easy to set up and to start. You have an idea or an opportunity to make a profit, and you will decide to go into business and you will do it. You don't need anybody else's opinion or money. Second advantage, management is also simple. You don't require the approval of a co-owner or your boss or your partner. It gives you a flexibility to make an immediate decision if a problem comes up and you need to solve it, no bureaucracy. A third advantage is the owner can keep all the profits of a successful management. You don't have to share the money that comes in. Of course, we can't forget, we also have to accept the possibility of the loss. But when we think about the benefits, people are usually willing to take the risks. Fourth, the proprietorship does not have to pay separate business income taxes. How? Because the business is not recognized as a separate legal entity. So the owner still must pay individual income taxes on profits earned by the sole proprietorship. But the business itself, the business is not taxed separately. They give you an example of the book of Mr. Winter. Imagine Mr. Winters, he owns and operates a small hardware store in a local shopping center, and at the same time, a small auto repair business in his garage next to his home. Because neither businesses depend on the other, and because the only thing they have in common is Mr. Winter's ownership, the two businesses are separate and distinct economic activities. For tax purposes, however, everything is lumped together at the end of the year. Everything goes together. When Mr. Winters files his personal income taxes, the profits from both his businesses are combined with any wages and salaries from other sources. So he does not pay taxes, extra taxes, on either one of his businesses separately. They're together. A fifth advantage is the psychological satisfaction. It's very good to know that you have accomplished something, that you have done something, when you have your dreams come true, when you are making profit, or you have status in your community, and people actually look up to you and admire you, and you're able to offer employment for others. A sixth advantage is that it's easy to get out of business. If you are tired, you don't want to anymore, you simply stop offering goods and services, and then you're out of business. Of course, like everything we have in life and economics, we have the disadvantage. Okay? First one is unlimited liability. This means the owner is personally and fully responsible for all losses and debts for the business. The business fails, it's your responsibility. So if it's your responsibility, the owner's personal possessions may be taken away to pay for the business debts. Going back to Mr. Winters, remember Mr. Winters, he owns and operates two businesses. But if the hardware business failed, his personal wealth, which includes the automobile repair shop, may be legally taken away from him in this case. So he will lose both. A second disadvantage is the difficulty of raising financial capital. Remember, we need capital. Generally, a large amount of money is needed to set up a business, and even more if I want to expand. However, banks and other lenders are often reluctant to lend money to new or very small businesses. It's very difficult for banks to loan money if you have a small business. So as a result, the owner usually has to raise financial capital by tapping savings, using credit cards, or borrowing money from friends and family, which is not a very comfortable situation. Another one is the small size of a proprietorship. It's also an advantage and a disadvantage. Why? In a real store, for example, it might need to hire several employees just to stay open during normal business hours. It may also have to carry a minimal inventory. You need an inventory. Because of the limited financial capital, the person might not be able to hire enough personnel or stock enough inventory to operate the business efficiently. For disadvantage that we have, the person often has limited experience as a manager. So sometimes the owner can have a good idea, but is not exactly good at managing a business. Okay, this can also be a fourth disadvantage. A fifth one is the difficulty to attract qualified employees. Remember, qualified employees always look for big corporations. They usually go after the benefits, especially the fringe benefits, which include paid vacation, sick leave, retirement, health, or medical insurance, in addition to wages and salaries. A sixth disadvantage is limited life. What does this mean? If the firm legally ceases to exist when the owner dies, quits, or sells the business, so if the owner of this business, dies, this business does not exist anymore. Okay? Finishing up, what are the major disadvantages of a sole proprietorship? First of all, they have total liability, okay, or risk for things that go wrong in the business, as well as having all the responsibilities and doing all the work without any help at all. So imagine you have the ideas, you do the sales, you manage the business, you train your employees. It's pretty complicated for one person. From here, we go to the partnership. Remember Samantha, we were wondering if she would prefer to work with her best friend. And let's see how responsibility is shared. A partnership is a business that is jointly owned by two or more people. I can have more than one person, remember. We have two types of partnerships. We have the general partnership, which is basically the most common form of partnership. In it, all partners are responsible for the management and financial obligations of the business. We also have what is called the limited partnership. At least one of the partners is not active in the daily running of the business, and therefore this person has limited responsibility for the debts and obligations of the business, and sometimes he even gets a lower share of the profits. Forming a partnership. It's not really so difficult to do. It can be started with a handshake, some formal legal papers. These legal papers, they are for a reason when they're drawn up to specify arrangements between partners. What for? It's not always required, but these papers, they usually state ahead. For example, how will profits and loss be divided among the partners? So this is in the document. The partnership papers may also state the way the future partnership can be added to businesses. I started my business with two partners. Why is this legal document important? It can state how can a third and a fourth partner enter the partnership. That's why we need the document. The advantage, one of them, the first one is the same as proprietorship, is it's easy to start. You get together and you start a business. We also have the ease of management, because imagine if one person comes up with ideas, the other person works in marketing, and one of them in management and employee training and so on. So you can help each other and make things much easier, especially if partners agree with each other. A third advantage is the lack of separate taxes on partnerships' income. What is this? As in the case of a proprietorship, the partners, they earn profits from the firm, and then they pay individual taxes, of course, like all of us do every year. So the partners have to submit separate schedules to the Internal Revenue Service detailing their profits from the partnership. But this is only for informal purposes, okay, and does not give a partnership any separate legal status. Fourth, they can usually attract financial capital more easily than proprietorships. This is because when you have a partnership, you are usually larger and you have a better chance of getting a bank loan, okay? Fifth advantage is more efficient operations that come with a slightly larger size. In some areas such as medicine and law, a small firm usually has 3 or 4 partners, and they might be the perfect size in the market. Other partnerships, we have accounting and investment firms. They have hundreds of partners offering services throughout the United States. What is that? Okay, this is where we take a look at the two types of partnerships and how they differ. The general partnership has the disadvantage that each partner is fully responsible for all the acts of the other partner. I am responsible for my partner and everything he does. If my partner causes my firm to suffer a huge loss, I will pay for it. This is similar to unlimited liability failure of a proprietorship. But it's a little more complicated when you have more than one person involved. As a result, most people in business are extremely careful when they choose a business partner. In case of the limited partnership, a limited partner's responsibility for the debt of the business is limited by the size of his investment. Imagine that I invested 50,000 reais in this business and it failed. So this business owns tens of millions. I will only lose my $50,000 in this business. This is my limited partnership. And remember, this has to be in a legal document before we start. A second disadvantage is like it has limited life. When one partner dies or leaves, the partnership must be dissolved or reorganized. A third disadvantage is the potential for conflict between partners. Remember, this is also a big disadvantage. Sometimes partners discover that they do not get along, they don't have a good relationship. So they have two choices: or I learn to work with my partner, or I leave the business. If the partnership is large, these types of problems can easily develop, okay? Main difference between a general partnership and a limited partnership. General, each partner is equally responsible for the business debts. In a limited partnership, a partner's responsibility is limited to the size of his or her investment. In a limited partnership, depends on how much money I invested. If my partner invested 200,000 and I invested 50,000, he will have a larger share of the gains and of the loss. Corporations, which is a third type of business, okay? Why do corporations collectively earn more profits than proprietorships or partnerships? Okay, forming a corporation. It's very different from a partnership. A corporation is a very formal and legal arrangement. People who want to incorporate or form a corporation, they must file for permission from the national government or the state where the person will have its headquarters. Remember, you need permission, okay? If approved, a charter, which is a government document that gives permission to create a corporation, is granted. You have permission. The charter states the company's name, address, purpose, and the other features of the business. I think this is very similar to our CNPJ. The charter also specifies the number of shares of stock here. Remember stock? Or ownership certificates in the firm. These shares are sold to investors. So this company will have its shares or stock, and the charter will decide how many shares this company will have, and these shares will be sold to people. The money gained from the sale of stock is used to set up the corporation. When this money comes in, it's used for the corporation. If the corporation is profitable, it may eventually issue a dividend. What is this? It's a check that transfers a portion of the corporate earnings to each stockholder. They will start giving money. What is the structure? When investors, they purchase a stock, if I purchase a stock from Petrobras, I become an owner and I have certain ownership rights. The extent of these rights depend on the type of stock purchased. Is it common or preferred? What is a common stock? It represents basic ownership of a corporation. Each share of stock usually has one vote to elect a board of directors. I have one share, I can vote on the board of directors. The director, in turn, sets broad policies and goals for the corporation and also hire a professional management team to run the business. So I have a vote in this, who's going to represent me. In the preferred stock, it represents non-voting ownership shares of the corporation. Preferred stockholders cannot vote for the director, but they receive their dividends before common stockholders receive theirs. If a corporation goes out of business, preferred stockholders, they get their investment back before stockholders do. This is basically the difference. In theory, a stockholder who owns a majority of a corporation's common stock can elect board members and control the company. In some cases, the common stockholder might elect himself or herself or even other family members to the board of directors. In practice, this is not done very often because most corporations are so large and the number of shares held by the typical stockholder is so small. Most small stockholders either do not vote or they turn their votes over to someone else. Okay? This is done with the use of a proxy. It's a ballot that gives the stockholder's representative the right to vote on corporate matters. Going here. Okay, so what is the advantage of having a corporation? It seems to be very difficult. First of all, is the ease of raising financial capital. Okay, the corporation needs more capital. It can simply sell additional stock to investors. A second one is a very important advantage. The corporation provides limited liability for its owners. This means that the corporation itself, not its owners, it's the corporation, not the people, is fully responsible for its obligations. For you to have an idea, suppose a corporation cannot pay all of its debts and goes out of business. Because of limited liability, stockholder losses are limited to the money they invested in stock. Even other debts remain. Stockholders are not responsible for them. Some firms will incorporate just to take advantage of the limited liability. For example, suppose Mr. Winter, who owns a hardware store and the auto repair business, now decided to set up a business as a separate corporation. Okay. If the hardware business should fail, his personal wealth, which includes stock in the automobile repair business, is safe. So he's totally safe. He will not lose it if he goes from being a partnership, from being a sole proprietor to a corporation. So Mr. Winters may lose all the money invested in the hardware business, but that would be the extent of his loss. Okay? Going on, a third advantage of the corporation. They can hire professional managers to run the firm. This means that the corporation's owners, the stockholders themselves, they can own a portion of the corporation without having to know how much about the business. I can be a stockholder in Petrobras. I don't have to know much about Petrobras, okay, because I have directors, professionals who run the business. Another advantage is unlimited life. The corporation continues to exist even if a shareholder sells the ownership. If I sell my stocks to another person, Petrobras will continue existing. Okay, because the corporation is recognized as a separate legal entity. The name of the company stays the same, and the corporation continues to do business. A very famous example that we have is Steve Jobs. Okay, and Apple. As though Steve Jobs passed away, Apple continues to exist because it's a corporation. This takes us to the fifth advantage, which is the ease of transferring ownership of the corporation. It's very easy. If a shareholder no longer wants to be an owner, or this person simply wants to sell the stock to someone else who becomes then the new owner, as a result, it's easier for the owner of the corporation to find a new buyer than it is for the owner of a sole proprietorship or a partnership. It's much easier to sell a share or to find another buyer. Disadvantage. Okay, the law recognizes corporation as a separate legal entity. Okay, it must keep detailed sales and expenses records so it can pay taxes on its profits. This leads to the first advantage, the double taxation of corporate profits. Profits are taxed the first time when the corporation pays income tax. The profits are taxed a second time when shareholders pay taxes on their dividends. So in this case, you are paying your taxes twice. Let's an example. Suppose a corporation pays a 25% income tax on profits of $100 or taxes of $25 and sends the rest of its profits to shareholders and dividends. The shareholders must pay a 20% tax on $75 of dividends or $15. In the end, the $100 profit that the corporation earned was actually taxed twice. First, 25% and then at 20%. Actual tax laws are much more complicated than this, but the double taxation of corporate profit is a fact of life for shareholders. Another disadvantage, the corporate structure is the difficulty and the expenses of getting a charter, depending on the state, and the attorney's fee, because you need attorney fees and filing expensive, It can cost several thousands of dollars, so it's not something very easy to do. You really need to pay. A third advantage is that the owners or shareholders have little voice in how the business is run. Shareholders vote for the board of directors, okay, and the directors, they turn day-to-day operations over to a professional management team. The result is a separation of ownership and management, so it's very different. The fourth disadvantage is that corporations are subject to more government regulations than other forms of businesses. The government will pay close attention to corporations. They must register with the state in which they are chartered. If a corporation wants to sell its stock to the public, it must register with the Federal Securities and Exchange Commission, the SEC. It will also have to provide financial information concerning sales and profits to the general public on a regular basis. Even an attempt to take over another business may require federal government approval. As you can see, the government has a lot to say in corporations. A discussion for you guys. Imagine a few years ago you had a hobby. You began to repair your friend's bicycle. And the word spread. And your friends' friends and friends began paying you to help them repair their bicycles. So now you're repairing bikes and designing and building new bikes as well. You've expanded. Consider the following. If you decided to form a partnership, which form of partnership would you choose? In which circumstances might you choose to incorporate instead of partnering? If you eventually grew your business into a corporation, what do you think would attract a stockholder or a stakeholder to invest? What is the difference between a stockholder and a stakeholder? Let's see. Stockholder is an individual or company, okay, that legally owns one or more shares of stock in the joint stock company. The shareholders are the owners of the corporation. Stakeholders, they are those people who stand to gain or lose by the policies and activities of an organization. Example, employees, customer, supplier, dealer, banker, and government leaders. Let's go to the fourth one. Remember the three most important we have been through. Franchising. I'm sure you guys have heard about it. If you go to McDonald's or Burger King, you can understand what's a franchise. We also have McDonald's, Pizza Hut. Franchise account for about 4% of all businesses. It's a very small piece of the businesses, but they're heavily concentrated in retail commercial areas where they're highly visible. Technically, a franchise is a temporary business investment that involves renting or leasing another firm's successful business model. What is the difference between rent and lease? Lease is an agreement, okay? Length of the agreement, usually 6 to 12 months or even more. They can be set for any length of time that the two or more parties agree to in the lease. This is managed by the property owner. A rent agreement, it's the length of agreement. Payment is made for at least as long as the lease requires. It's managed usually by the tenant, the person who pays the rent to use the property. Okay, we have the franchisor. Who is he or it? It's the actual owner of the business that lets other investors rent or lease its name. Lease its name for 12 months, 1 year, 2 years. It's a business profile and a way of doing business. The franchise is the investor. So when you see McDonald's over here, they are the franchise, the investors. They rent or they lease the business model from the franchisor, and then they hope to recoup their investment by selling the franchise goods or services. How can you become an owner? People who buy a franchise are usually investors who always wanted to go into business for themselves, but they never did. Or they may already own a business, but they are looking to earn more income. For example, think about Mr. Winters, our sole proprietor, who has a small hardware store in a local shopping center. Business had been very slow at the store, so he was thinking about buying a franchise. What can be good for Mr. Winters? Okay, Mr. Winters knew what the advantages were for him. He would be into nationwide network, he would have a respected product, a deep product line, excellent quality standards, nationwide advertising. Remember, advertising is very strong in franchising, and professional advice. Whenever he needs help, he has a team, professional advice. With a little bit of luck, he hoped to see some annual profits after the startup costs were recouped. However, there were advantages to the franchisor as well. For example, Clampon would be able to add one more location to its nationwide network without having to build a single new brick. Remember, imagine this as a company, okay, as McDonald's. They can add more locations, but they don't have to build anything. This is because Mr. Winters was providing one for them, something that greatly reduced the financial risk of Clampon's expansion, of McDonald's expansion. So there were other potential risk reduction as well, because liabilities for employee or employer misconduct, sexual harassment, safety code violation, etc., would be the sole responsibility of Mr. Winters. All of these factors, they are Mr. Winters' responsibility and not the Clampon, the company's responsibilities. The upfront franchise payment would help Clampon's profitability. They would get money, as would the monthly royal fee. They would get a fee each month. Finally, by requiring Mr. Winters to make a substantial investment at the beginning, the company felt that he would be highly motivated to make the franchise work. What is the disadvantage of Mr. Winters? He was clearly aware of the investment he would have to make for the company, tool and hardware store. Okay, still, other franchises were a lot more expensive and they seemed to work. For example, the startup costs alone for McDonald's could be as high as $2 million. Imagine this. Or even $50 million for a Hampton Inn and Suites. $50 million for you to have a franchise. Mr. Winters also knew that there would be a substantial cost if he wanted to terminate the franchise before the 10 years were up. So the lease here was for 10 years. The main thing that bothered Mr. Winters, however, was knowing that owning a franchise is not the same as purchasing a business for the purpose of ownership. He knew that if he went with Clampon, he was likely to have 10 years of profit, but then nothing in year 10 except for the right to renew the franchise. So why do business owners prefer corporations over other forms of business? They prefer corporation because in this organization, the individuals involved have no liability if the business loses money or fails. Guys, in our next video, we're going to be talking about labor and business, okay? If you can take a look at the vocabulary, chapter 9, it will be really nice. Let me go back to your assignment, your first assignment in Unit 3. So this is the first part of your assignment, okay? As you can see, the second part of your assignment is connected of what we have just seen. Okay, a table can be a great way to organize information. Use the table below to take notes on the various types of business structures. Write your notes here. A sole proprietorship, how is it formed? Go to chapter 8, okay? What are the advantages and disadvantages? The same thing for partnership, corporation, and franchise. You write everything here. Which of these types of businesses would you be most interested in starting? This is about you. We have 3 points here. Click and you enter your answer. Which of these would you be least interested in starting? Which one of these businesses would you be least interested? Remember to say why. It's very important. And when you complete, you need to save this document by first name, last name, and externality. How? Imagine I'm saving my documents, okay? I go, wait. Okay. I will write first name, underline, last name, underline, and then I will write externalities. And I will save my document. After this, I will go back here No, not here, actually. I will go to my Blackboard. I'm sure you guys all know how to access it. I will log in. Sign in. Economics. My Blackboard can be a little different from yours. It's okay. You go to lessons. We are on business and labor lesson 3, okay? This is the overview for you to do. You have the guided reading, and here you have the lesson 3 assignments. To complete the assignment, download lesson 3 assignment graphic organizer. It's this one that you have seen right here, okay? Download it, complete it, and then you upload it here. You go to the instructions here. I cannot upload, but in yours you will have, okay, you click on browse my computer and you will submit your assignment. Let's take a look since we have a holiday on Thursday. Assignment number 3, which be outsourcing jobs. Okay, we're gonna take a look at our debate in Unit 3. You will go to debate. Do current copyright laws do more harm than good? And this is what your lesson is going to be about. It says, access the copyright debate. Okay, examine carefully the introduction of all the arguments for, in favor, or against outsourcing jobs to foreign countries. Write answers to the 3 questions. So how are you going to do this? You'll go here, you will read the debate, and you will answer the questions. Let me go to the first page. Okay, I think I have been logged on too much time. Come on. Let me try just to log off again and come here. Just bear with me, okay? If you have time. Okay, so debate here. Let me go to page 2. Okay. After you read, you will answer these 3 questions. You can answer them here. Okay, and then you copy your answers and you go back. This is not where I want to go. Your assignment. You click here and you copy your answers in. Okay? I'm going to talk to you about lesson 3, market failure and the government. You need to create a cartoon that explains each of the 5 causes of market failure. Guys, this is in chapter 7, lesson 2. Okay? You're going to go to chapter 7. This is chapter 7. Okay. Here, market structure. Okay. And you will go to lesson 2. Okay, so this is basically formed on lesson 2. Okay, try to make a cartoon that explains each of the 5 causes. Remember that the drawing should show how the market can fail for that reason. We have many reasons for market failures. You will not be graded on your artistic ability. Okay, but if you prefer not to draw your own cartoons, you may choose to create your cartoons online using Pinton.com or another program that you might like. After you complete the drawings, add a statement for each drawing. So remember, we have more than one type, okay? If you go here, why do we have market failures? We talked about the overspilling. Okay, not enough competition, not enough information, resources. We also have too few public goods. Let me go. We have spillover effects. I think this is. So we'll take a look at this. You will read carefully and you will go here. You will make a drawing for each one. I hope that this is clear. And you also make a statement about each one. After you complete the drawings, add a statement for each drawing, explaining how the government might step in to try to to fix the cause of market failure. Remember, in negative spillovers, how can the government step in? Can they, I don't know, we have tax laws. If a company produces a lot of pollution, they pay more taxes, whatever. Then you upload a photo, or you may scan your work and upload it if you are the type who likes to draw, okay? Submission instructions, don't forget, click on the Browse My Computer button, navigate, and upload your document. The checkpoint, guys, checkpoint 2 is also important for you to do. What is the checkpoint? It's pretty simple. You will submit this assignment using the text submission box that appears here. And you have to answer this question. Do you have any questions about the course at this time? If you have any questions about this course, please write your question here and submit it, okay? And let me find my StreamYard. Where is my StreamYard? Okay, let me see if I finished. Okay. So this is basically it for today. I will send you in a little bit our lesson. Remember that Unit 3, 2 assignments, they go to Chapter 7 from Unit 2, so you have to go back. Chapter 7 is very important for us to read. Talks about market and market failure. I don't think they're difficult assignments. Just pay attention to the instructions. I really hope you can get them done as soon as possible so you have more time to do other things. I will send you, as I said, the video around 2:45. You guys watch the video. Then I will be online so we can discuss, okay? If you have any questions, if you have any doubts, or if you have actually anything to add to our lesson, okay? I'll see you in around 2 hours. End broadcast. There we go.